We may not have enough houses for Australians to live in the next 5 years. And that's just not clickbait, that's the reality that's playing out right now. And that's why in this video, I want to cover off things like what construction is looking like in terms of the goals that the government has set up, as well as why we're not achieving it. And then a couple of other factors we need to consider that need to change in the next couple of years. Otherwise, we actually have an issue. So if you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, we've been hearing for the better part of the last 3 years that we may have a construction issue. But the reality is we actually have an economy issue. What I mean by that is we need to look at the economy as a whole before we decide, oh, housing construction's the issue, that's where we need to go fix it. Because the RBA has come out specifically and said there is no quick fix. And I actually agree with them. Now, the truth is, in 2020 and 21, everyone was really happy with making all this money by staying at home, asset prices were going through the roof, and we were all so happy. It was a wonderful time. But not really, because we had lockdowns, and that's why we had all this artificial stimulus into the economy. At that point, I also mentioned on the channel that, hey, we might have a problem with inflation coming soon, so we better prepare. Now that we've had inflation around for a while, we're like, when does this ever end? And the reason why that's so important and ties all of this together is interest rates. Inflation needs to remain between 2 and 3% for the RBA to reduce the interest rate. Now, why is the interest rate important, Ravi? Well, it's the cost of borrowing. So if we have interest rates where they're at the moment, it means that a lot of people are unable to borrow enough funds to be able to go and renovate their home or go out there and purchase a new home, upgrade, downgrade, whatever the case is. Transactions start to slow down. Now, one of the flow-on effects from that is that nobody really wants to construct a new home because they can't get the borrowing for it. Even worse is the uncertainty around the economy, which then means most people are saying, I would rather not build a house right now because I have no idea what interest rates will look like in 12 or 18 months' time. And that's a great segue into what I've been warning you guys not to be doing is buying off the plan stuff. Over the last couple of years, imagine having bought an apartment off the plan or a house and land package where you said, okay, well, I can afford this because interest rates are at 2.5% or 3%, no problems, I can do this. Well, yes, property prices in some areas have gone up, but in many other areas they have not. And what's worse is even if they did go up, you can't do anything about it. Because so many people, unfortunately now, have to deal with getting servicing at interest rates that are 3 or 4 times higher than what they were initially getting. And so now, if you can't complete a build, you unfortunately don't have a house and you probably lost your deposit as well. That's the scary part around buying new, and you should definitely go check out this video because I explain a lot more around the pros and cons. Now, if we look at right now and say, well, the counter could happen here, let me buy something now and then in a couple of years, interest rates surely come down. Well, that's the uncertainty. And that uncertainty is keeping a lot of people on the sidelines from going and building a new home. And that's what the data is suggesting. It's suggesting that people don't really have an appetite to take out a loan for a new build. And so that's further cascading the problem where if people can't borrow, they unfortunately have no choice. But the people that can borrow are still uncertain and they're not even taking up the loan. Now, for the unique few that are going out there and saying, okay, I have the ability to borrow, so I'm going to borrow, and I'm going to go and build a new home. Well, I can do that, but unfortunately I have to go through the government. And what you might not know is that the planning approval stages are absolutely whacked. The numbers have gone and blown out by 20, 30, 50% in some cases as to how long it takes the council to actually approve a new dwelling. That's another problem that leaves people like myself scratching my head going, why is it so much harder now than it was before? Especially because right now we don't actually have that much to approve, so just approve them. We know we have a problem with housing supply, so why not just go out there and actually just approve faster? I don't know. Now, the Urban Development Institute of Australia has just launched a new dashboard. And for someone like myself who likes data and likes playing in these things, I thought it would be really wise to share something like this with you guys, because I think you're going to find some value from it. So this is the interactive UDI Housing Index and UDI Housing Dashboard. Now, it may make no sense at all. I'm going to summarize it and make it really simple to understand. Much like the consumer confidence, 100 means we're good. Anything above 100 means, well, depends on what side you're on, if it's supply or demand, but it often means it's an overkill, so it's overheated. If it's under 100, we have a situation where we're undersupplied or there's not enough demand for something. So let's have a look at where the demand looks like. Now at the moment, what we can see is we are covering off in the blue, original, and then red is seasonally adjusted. Now I would look more at the seasonally adjusted personally because it's more of an average and it smooths out all the ebbs and flows. What you can have in one month doesn't really occur in the following month, so that's what I'll go with. Now what we can see here from a demand perspective, we're at 126. And if you look at quarter on quarter, it's minus 5.4%. But year on year, we're up 0.8%. So this is essentially saying demand for housing is higher than where it should be. And you can see why, and it's mainly due to the fact that we've got population going up and new dwelling sales going down, as well as owner-occupied dwelling lending also going down. Now that's from the demand perspective. Now, if you just looked at that and said, well, demand's really high, so that means prices will go higher. What we need to see is supply, because if supply is at 150, then you've got an imbalance where supply is higher than demand, and we all know what that means. Say it with me, prices go down. Now, is that the case? Well, supply is at 89. And as I said before, if it's above 100, we are good to go, but if it's below that 100, we don't have enough houses being built. And what's crazier is when you actually see the effect of what the home builder stimulus had, we would have seen this ratio or this number go up to 111. And that's because there was incentives to go out there and build. Now what we're seeing is a complete downturn, and we are now at levels around 85 to 89. And this number is not slowing down anytime soon. So when you look at quarter on quarter, it's down 0.3%. And if you look at seasonally adjusted, it's down 1.3%. Now, when you take a look down here, you can see rental listings falling quite dramatically. Although resi construction work has been increasing, we just don't have enough dwellings commencing. And that's pretty much in line with dwelling approvals going down. And one of the biggest reasons for that is home approval times. Now we've had the Australian government come out and say, look, we're going to build 1.2 million homes, which would mean we'd have to be building 240,000 homes every single year. Well, let's see how we're tracking for that, because I don't think it's going to work out. And that's exactly what we can see in this graph. What we can see is that numbers, although on this chart goes to 2023, this number is nowhere near where it should be in order for us to get to the number of 1.2 million. And the reason why we have such a big issue is going back to this graph, which is Australian net overseas migration. We can see that this is normal immigration. This is not so normal. When you have this overlaid with how many approvals are happening in the country, we then see a big problem. That's why you'll still see that rental prices, although have been decelerating when it comes to price growth, they are still really high. In some areas, 50 to 60% higher than before the lockdowns actually occurred. KPMG Australia conducted some analysis around where are these homes supposed to have been constructed, but they haven't started. And they found that nearly 40,000, yes, 40,000 homes were yet to commence. And about half of those were for Sydney and Melbourne. They're getting approved, but they're not commencing. And that is also another problem. If you think of roadblocks and stage gates, you've got people going out and saying, I want to go and borrow, and then have the ability to borrow, and then from there going to get approval, to then actually commencing after they've got approval to see it all the way through. This problem is not a quick fix. And that's why the RBA is also coming out and saying, unfortunately, our hands are tied. The RBA knows that if they drop interest rates, they can alleviate the problem of the rental crisis slowly but surely, and they can also address how many houses go in to the pipeline to actually get built. But even if they did decrease interest rates and cut interest rates in 2024, like we're all hoping they do, unfortunately, it doesn't mean in 2025, January comes around and you suddenly have 40,000 new homes. Now check this out. The Australian Financial Review reported that Australia ranks 23rd out of 33 developed countries for the number of dwellings per 1,000 people, highlighting Australia's ongoing housing shortage. Despite promises to improve housing supply, figures in the article show that the housing crisis is only worsening, with the development approval waiting times reaching up to 4 months in Victoria and New South Wales. Additional numbers from the Organisation for Economic Cooperation and Development showed that dwellings per 1,000 fell from 92% of the OECD average to 90% over the last decade. When we talk about predicting house prices, where prices will be, it's not as important as knowing what the underlying factors are. Now I can chuck a bunch of data and statistics at you guys, but I'm going to simplify it all right now. The cost of construction materials is still up about 33% since the lockdowns actually occurred. When you have the cost of building along with every other issue we've just explained, it means that unfortunately for the next 18 to 24 months, we will not see levels of supply that we need to in order for us to even normalize the market, let alone crash the market. There are people out there way smarter than me that I've had chats with and have actually told me, Ravi, there is no evidence ever that we have seen prices go down when it comes to a crash of 10, 15, 20% without having an oversupply in that market. So this is something for you to take away. If we're still 18 to 24 months from getting supply to neutral, where do you think prices will be in the next 18 to 24 months? Is it going to crash because we have an oversupply? Well, based on all the data points that I've just shared here and all my research, plus talking to people way smarter than me, it doesn't look likely. And this would all tie in with the 18.6 year cycle quite nicely, but it could probably extend a little bit further because we still have the tap of migration. If we can even get supply up to the levels we need, if the government still introduces more immigration, unfortunately, we still have an undersupply of homes. Hopefully this video allows you to understand exactly what the dynamics are when it comes to the housing crisis and the rental crisis here in Australia. If you're interested in what my thoughts are when it comes to property analysis and so much more, definitely subscribe to the channel. And if you're interested to know what the real rich people are doing in this world and how they somehow purchase more and more real estate, then definitely go check out this video that'll pop up right now. I hope you guys have enjoyed this one. I'll catch you on the next one. Thanks guys.